Good evening, traders, and welcome to BCR's evening market outlook. Starting with oil, traders are watching growing uncertainty around Russian crude exports through the Baltic Sea. Shipping delays and infrastructure maintenance are adding to the supply risks just as seasonal demand begins to rise. On the charts, WTI crude is rebounding from an ascending support channel with the $55 to $60 range acting as a long-term support. Despite bearish signals with the 50-day moving average still below the 200-day moving average, prices are consolidating near the edge of a triangle above $60, suggesting a potential for a bullish breakout. A move above $65 could open the way towards $75, while a break below $61.60 would invalidate the pattern and resume the downtrend. Turning to the US dollar, economists now expect a total of 75 basis points of cuts this year, delivered in 25 basis point steps at each remaining meeting, which would bring rates to 3.5% to 3.75% by year end. That view contrasts sharply with market pricing, which suggests 141 basis points of easing by December. The updated dot plot is likely to show 75 basis points of cuts by 2026, though dissent is expected on both sides. Up to 3 dovish members may push for a large 50 basis point move, while on 1 or 2 hawkish members could argue for no cut at all, setting up one of the most divided votes for 1988. Finally, in gold, the market opened the week with volatility as traders tested the key's $3,700 level. While a short-term pullback is possible, many see dips as buying opportunities. Technically, gold has broken out of a large ascending triangle, pointing to potential upside towards $3,800. In the near term, support sits at $3,600 and more firmly at around $3,500 near the 50-day moving average. Pullbacks to these levels could provide a base for the next leg higher. That wraps up today's afternoon market outlook. Stay tuned with BCR as we continue to track moves across key assets like oil, the dollar, and gold. As always, manage your risk and happy trading.